In this video, I'm going to walk you through how to set up a business budget using a software called YNAB, or You Need a Budget. Because if there's anything the last couple of months have taught us as business owners, it's the importance of an emergency fund in our business. But in order to have an emergency fund, we have to have a budget set up. We have to know where our money's coming from, where it's going out, so that we're able to funnel some of it into a savings account. So that's what we're going to do in this video. Now, you might be wondering why a mindset coach or belief breakthrough coach is doing a video on business budgets. And that's because in order to have a healthy money mindset, you got to have the skills to back it up. So I'm going to jump into YNAB and show you how to create this skill for yourself right now. Okay, so YNAB is not free, although it is worth every single penny. This video is not sponsored, but if you use the affiliate link in the description, you will get a free trial of YNAB, and it also helps to support this channel. So thank you very much for that. And I just want to say, this pays for itself right away. So when we first started using YNAB, it was because we needed to figure out our emergency fund. We were able to save $50,000 in a year thanks to YNAB. It was about 25%, more than 25% of our income. If you need to be able to save 25% of your income, trust me, YNAB is the best product out there. We tried a bunch of other ones, and there's reasons why we went with YNAB because the other ones didn't work, especially as a business owner. So keep that in mind. Yes, it is an expense, but it is a worthwhile expense that pays for itself usually in the first month. Okay, so I'm going to walk you through how to create a budget. So we have a budget set up for our business as well as a savings budget, and we do that for our personal as well. And then my husband has a budget. This was actually a sample budget that I was playing around with, and I'm going to set this up for you right now. So when you log in, you're going to create your budget, set your settings, do all those things, and then it's going to populate a format for you or a template for you. Now, a business budget template is obviously going to look different than this because you may not have rent or mortgage or auto maintenance and all those things, but that's fine. Don't worry about that. The most important thing though is just that you get this set up and you start making tweaks over it. You're not going to be able to master this the first time you set it up. It will probably take some time to really get the hang of it, get everything in here that you need to have in here. So take your time with it. Once you get it first set up, the first thing that you're going to want to do is add your accounts. I recommend that you do the linked account because this is going to automatically pull in all of your transactions, which makes your job about 100 times easier. I'm going to do unlinked simply because this is a test. And so we'll say test checking, and let's just say our current balance is 8,000. And then let's add another account. Again, it's going to be unlinked for this. And we're going to do a credit card account. This is one of the reasons why I like YNAB. Most other budgeting softwares did not take into account credit cards. And so you couldn't budget between multiple accounts very well. And it would look at your credit card payment as income. And it was just kind of messing up our whole budget. I love YNAB because you can set up a credit card. So if you run your business expenses through a card, for instance, if you're trying to get points back for your purchases or you're making a big purchase that you have to pay off over time, this is going to help you to still maintain your budget. Let's just say there's a zero balance on this one. What you're going to see now is that it's set up the credit card. It's set up your checking with a to be budgeted balance. And when you come over here to budget, you're going to see that balance right here. Now, it's not going to let you budget money that's not there. So any of your initial income or any of the money that's currently in your account is the only thing you'll be able to budget throughout the month or 2 months or however long that money is going to last you. You'll also notice that it set you up a credit card payments right here. The reason for that is if you put something on the credit card, it's going to take it out of the budget and put it into the card. So let me actually show you what that means. So let's say on the credit card, we're going to add a transaction. We're going to say that it is from, I don't know, Costco is the first thing that comes to mind. And we're going to put it under, we didn't change all of these yet. I'm going to show you how to change these and what you're probably going to need to change. But let's say it's computer replacement and we have $1,000. So we save that. What that's going to do is show us that we have $1,000 on this card. It's also going to show us down here that we went $1,000 over our budget because we didn't have any money set aside for this. There's two ways to set this money aside. You can either click here and click to move $1,000 to computer replacement, or you can come down here and do it here. So you can create this, you can use everything that I'm teaching you here in your own spreadsheet. This is just gonna automate the math and make it so you don't have to set up complicated spreadsheet rules, and it's just gonna make everything easier so that when you actually come around to do your budget on a weekly or bi-weekly basis, it's as simple and pain-free as possible. Most of the reasons why people do not set up a budget or don't maintain their budget is because it's a headache, it's overwhelming, it's very triggering, it brings up all of our money stuff. The more friction you can remove from that path, the easier you can make this process, the more likely you're gonna stick to it, and the more likely you're gonna get the benefits from it. So that's another reason why I love YNAB. So what you'll notice here, when I added it here, it took away down here, and it also moved that $1,000 into the credit card payment. So the money is still in this account. If you notice, this hasn't changed. The money's in this account, but now I have set aside that money for my credit card payment. So when I come over here and I actually make a payment on my card, we want to do inflow, $1,000, and we're going to do a transfer from checking to show the payment. Once we save that, this will show as paid off. This will show the payment, and this will show that we're settled. This will show that we're settled. So again, everything's automated, super, super simple. It moves everything around. But now I want to show you how to actually set up your business budget, what things you should put in what order, so that you can make sure that you're managing your money in the best way possible. Real fast, a quick note that I almost forgot. Make sure when you're setting this up that you do not put your savings accounts in your main budget. This is why we have 2 budgets set up for our business, 2 for our personal. One is for our checking and our credit cards, where our actual money is coming in and out, and one is for our savings, where our money is going to be able to set aside. If you put them all in one budget, it makes it very complicated to track and to look at your reports, because it's going to show that things were moved around, but it's not actually going to show where they were moved to or what categories those movements actually fell in. So it won't show that you're actually hitting your savings goals. It's just going to show you that money has been moved around, and you are just going to show more money in your accounts overall. Okay. So the first thing to do when you're setting up your business budget template is to set up groups and categories within those groups. So in YNAB, these are considered your groups. You can edit what's here, or you can create new ones by coming up here to add a new category group. These are the categories within each group. So for instance, if you've got something like groceries, this is your category for any transactions that will fall under groceries. Now, what do you need for business? The very first thing that I recommend that you set up in your first category is tax and savings. So most of these initial ones can actually be deleted because you're probably not going to use them. If you are going to use them, you can move them down, such as going like that, so that you put them in a different category. What we're gonna do here is do taxes, and we're gonna say this one is savings, and then I'm gonna actually delete this one. So if you're not sure what your tax and your savings rate should be, I recommend that you go off of percentages. So when it comes to your taxes, round out the percentage in terms of the tax brackets that you fall in, remembering that just because you make $1 over the current tax bracket that you're in doesn't put you all of your income into that next tax bracket. And don't quote me on these numbers, I don't have them exact, but something like the first $10,000 or $12,000 you make is taxed at the first tax bracket. And then every dollar you make over that up until the next tax bracket is taxed at the next tax bracket, the second tax bracket, and so on as you go up. So if you're making $250,000 and then you make $250,000 and like 2 cents, only those 2 cents are going to be taxed at the next bracket. Again, these are not the actual brackets. I don't remember the numbers offhand. You can Google that. But what I recommend you do is find a percentage that balances those out. So for us, we set aside 20% for taxes. So everything that comes in from our to be budgeted or comes into the to be budgeted, we first take out 20% and we put that aside into our taxes. So for instance, and this is what's really cool about YNAB, we can say $7,000 times 0.20, and it's going to do the math for me and put aside that $1,400 for taxes. You can do the same thing for your savings. Take a percentage. And what I recommend that you do is choose a percentage that feels doable, but maybe stretches you a little bit. So whether this is 5, 10, 15, 20%, and set that up as a bill to yourself. Make it so that it's automatically transferring from your checking to your savings, and put it in here so that you're automatically budgeting those things first. The reason that I'm having you set up taxes and savings first is that when you go and you put in the money that you have into your budget, you're gonna go down this list in order of priority. And the first thing you need to do is pay Uncle Sam so you can stay in business. The second thing you need to do is pay yourself so you can make a living, and then you move down the list from there. I like to add in a giving category, and from here you can add in, let's say, charity number 1 and charity number 2. And let's say from here you want to give 5%. So figuring out 5% of 7,000, that's going to be like $350. And then you can split this in between these two separate ones. So we'll do 350 and 350. And let's actually come up here to savings because we didn't do this one yet, and set aside $700. So now you know that you've got $4,200 to last you however long you need to make it last you, whether that's to the end of the month or the end of next month. The next category that you want to set up is salaries and services. This is paying yourself and paying your employees or contractors. So we can move these down. And let's say for yourself, you're gonna say personal salary, and then you've got an assistant, and then like for me, I've got a video editor, and those are all gonna go in here. You can also prioritize these if you want to, so that if you ever have a lean month, you know, hey, I'm not gonna be able to afford so-and-so contractor this month. Now, I recommend that in this category, these are payments that you're consistently making on a month-by-month basis. If it's something that you're not making on a month-by-month basis, if it's something like a CPA that you're using once a year, that might actually want to go in another category. But right now, what we're doing is we're creating things in the priority that you're going to be paying them out. And so obviously paying yourself and paying your people is top priority. So next we have monthly expenses. This might be things like your phone, your internet, your office supplies, anything that you're paying on a regular monthly basis or that you want to always have a little bit set aside for. So for instance, with office supplies in particular, I don't have office supplies that I'm buying every single month, but I like to have $100 set aside in case we need to run out and get paper or get ink. The way that you can do this is to set a goal. So there's several different ways that you can set a goal. A monthly goal is how much you want to add to that category every single month. Or you can have a target balance, which is what I would do with something like office supplies, where I just want to create a $100 goal to always have $100 in there. So if I spend 20 this month, next month I'm only going to add 20 to it, or my next income, I'm only going to add 20 to it. Versus if it's something like internet, this is obviously going to be a monthly goal. And so let's just call it $50. This is going to be something that every single month I'm putting $50 towards. Other things that are going to go into monthly expenses might be things like hosting fees, monthly subscriptions like Zoom, or any sort of like advertisement budget. Anything that you're paying out on a regular monthly basis is going to go into monthly expenses. And again, you can categorize these in terms of priority. Which ones need to come first? If you have a lean month, which ones potentially could come last? So most of us do have a variable income, so you might be wondering how you're going to make that work with all of this, and I will get to that. Right now, all I want you to do is be filling this in. And so what's really helpful is to look over your bank statements for the last 3, 6, 12 months and pull in anything that you might be missing. Do the same thing with your credit card statements. There are always things that you're going to forget, so don't worry if you don't have everything. There's actually a little category that YNAB places in here that I recommend that you keep called Stuff I Forgot to Budget For. I usually call it Shizzy I Forgot to Budget For. And I like to keep money set aside just for the purpose of things I forgot to budget for. Now, most of your expenses are going to fall under monthly expenses, but as you're going through those statements, you're also going to pull in annual expenses and you're going to pull in occasional expenses, and you're going to put these into separate categories as well. Your annual expenses might be things like business licensing, it might be things like domain renewals, it might be annual subscriptions. So for instance, I use CLICKUP, which I did a video about a couple weeks ago that you can check out, and I pay for that on an annual basis to be able to save money. I actually set that up in an annual category, but I add to it every single month so that when it comes to renew, I think it renews in July, I already have that money set aside. So let me show you what I mean. I would go ahead and set up CLICKUP, and I want to say it's about, let's call it $220. I don't remember offhand. So I could either put $220 in here, and then once a year, I just need to pay it, and then I need to replenish it. But instead of doing that, you can have a by date goal, which would mean $220 by, let's say it was May 2021. That's going to tell you what you need every single month. So budget $15.72 every month to stay on track. So that's one way I could do it. Or if I want to, I can just do the math. Now, I actually don't prefer to do this because as of right now, this won't automatically renew every year. I have to go in and reset it up, which I might not remember to do. So instead, what I end up doing is setting up a monthly goal, and we'll just call it $15. And then every single month, it's going to prompt me to add in $15. When that renews, I'm going to be able to pay it out of that chunk that I have set aside. And the next month, it's just going to remind me to set aside another $15. So I never feel a big hit when these big subscriptions come around because with the budget, I'm able to set aside a little bit at a time. One benefit of doing a target by date goal is that if you need to take money out of that chunk of savings or that money you've set aside, it's actually going to adjust the date. So let's say you've been paying $20 for 12 months to save up $600, but 3 months into it, you need to take out some of that money. It's going to now adjust it so that your following months are going to be a little bit more so that you're still hitting that target date. So your occasional expenses might include things like computer replacement, travel, gifts, as well as things like training, courses that you want to take, coaches that you want to work with. So this allows you to be able to set aside money for that and always have something available so that you can continue to do things like continuing education. But putting it on the bottom of the list means that if you have lean months, you're not going to be contributing to those in that month. So if you have $4,200 come in, you can now go through and choose which ones you want to fund. And let's say we're not going to fund these ones and you're going to fund the rest of them. This is going to allow you to prioritize where that money is going every month. Again, we want to prioritize first our taxes, our savings, and our salaries, and then everything else comes after that. Okay, so how do you make this work with a variable income? The first thing that I want you to do is look over your bank statements over the last 12 months and figure out how much money you're actually bringing in. I want you to figure out your average. Now, this doesn't necessarily mean you're going to average every single month, because if you have a rare month every once in a while of zero, and you have a runaway month every once in a while of like $50,000, you may not want to take those into account. What I actually want you to do is figure out a reasonable average amount that you earn on a monthly basis so that you can compare your current budget, the expenses that you have, to the average income you have on a monthly basis. That being said, remember not to take out more than 1, 2, maybe 3 anomaly months from your overall income. Because if it's happening more than 1 or 2 times, it's not an anomaly, it's a pattern, and we want to be able to plan for that in your budget. So here's what we're going to do. You're going to click the select all category, and you're going to look over here to your underfunded. Now, I don't have all these filled in, but let's say your underfunded is $3,000 and your monthly average income is $3,500. Great. You've come in under budget. You've created a budget that's going to work for you. And now you know everything over $3,000 is bonus money. However, if you come in here and you realize that your average income is lower than your monthly expenses, you get to make some choices. This is the benefit of having all of this together in a budget like this, is that you can see patterns and you can see things that need to change that you wouldn't have otherwise seen. And now you have them organized and prioritized in a way that allows you to see what's actually important. So obviously taxes, savings, salary, but also your monthly expenses, your annual expenses, and your occasional expenses you'll be able to prioritize based on when money's actually coming in for those things. It's important that your monthly, your annual, and your occasional expenses do not exceed 30, maybe up to 40% of your total income, because you want to make sure that you have enough set aside for profit and for taxes. Most people do this opposite. They don't follow the profit first strategy, which means they pay all their expenses, then hopefully they pay their taxes, and then they take what's left over. The profit first strategy, which is talked about in a book called Profit First, and I'll link it below, highly recommend it. This actually helps you to make sure you're paying your taxes, you're paying yourself, and you're paying everything else in order of priority. If your expenses are more than 30 to 40% of your total average income, you need to make cuts or make some consolidation. So for instance, when I first did this, I realized that I was spending a lot of money for email services and for hosting over here and for doing this and doing that. And what I could find was actually there was one software, one system that would pull all these things together, and it would cut my expenses by about 50%. So when you're able to see all this in your budget, you're able to figure out those things. What can I cut? Where are we spending most of our money? What can we do to make adjustments here? Another example of how we were able to do this was with our cell phone. We realized we were paying $200 for our cell phone. That's a big chunk of our expenses every month. And so because we were able to actually see that, compare it to other things that we thought we were spending a lot of money on, but were actually less, we were able to then go in, do some comparison shopping, and find a better plan. Which leads me to my next piece of advice, which is to schedule time. I recommend on a weekly basis, even if it's just for 5 to 10 minutes, to go in and work on your budget. This might mean planning some things, readjusting some things, recategorizing, moving money around so that you can pay for other things. And slowly over time, while you're consistently doing this, you're gonna iron out the details so that pretty soon this takes 5 or 10 minutes, maybe once or twice a month, and you're staying on budget because you've created these habits and these routines. Also, because you are budgeting for your low average months, this is gonna allow you to be able to stay within that budget, but also have these big chunks of money come in when you have a bigger month. Now you can use this big chunk of money in a few different ways. My first recommendation is to set it aside in a savings account so that you have 6 to 12 months or more of emergency savings. This means 6 to 12 months or more of expenses covered so that if you had no income whatsoever, you have something to draw on instead. Once you have that set aside, I recommend that you start getting ahead on your budget. This is where YNAB is also really cool because it allows you to budget for future months. So let's say, for instance, that April was all budgeted out and I still had this $4,200. I could go into May and budget this $4,200 into May, getting me a month ahead in my expenses. Once May is all filled out, you can do the same thing in June, and you can continue on so that you're able to just stay ahead of bills. But just be patient with this whole process because it does take time to iron these details out, and you're gonna have a lot of emotions come up through this. You're gonna get frustrated, you're gonna get overwhelmed, and all those things are natural and normal as you're adjusting the habits and the mindset behind everything you're doing. By the way, if you are new here, my name is Tara Wagner. I'm a belief breakthrough coach helping women to crush their goals, not their soul. Normally, I'm dropping weekly coaching videos to help you overcome limiting beliefs and bad habits, but about once a month, I like to do a money mindset video where we tackle either mindset directly or money skills such as business budgeting. So if any of that sounds like your jam, be sure to subscribe, hit the bell, leave me a comment with your thoughts, or to share your best business budgeting tips with others. Yes, that is a tongue twister. Also, make sure to hit the like button and check out these other videos on money mindset. Thanks so much for watching. I will see you over there.